Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as VRTrader.com. Welcome back to the show, Mark.
Glad to be here. Thanks for having me.
Mark, do we have a special offer for our listeners?
We do. We'd love to offer that. It's a promo code of 2022 half off. That's 2022 HALFOFF 2022 half off, and you go to VR Trader. That's Victor Robert, VRTrader.com, and we have a whole group of newsletters. And when you select on any one or all of them, I'd love to see you sign up for all of them. When you get to the promo code section, enter 2022 half off, and you get 50% off of any subscription.
Mark, is there anything else you'd like to let our listeners know before we get into it?
Yeah, sure. Thank you for reminding me. So I am not a financial advisor, nor do I provide financial advice. It's an educational letter and has been for over 42 years.
Are we seeing a bear bounce in the U.S. stock market?
Yes, that seems to be what's happening. It's funny how it got triggered, and how long it lasts, of course, is another question as well, because some of these have been 1 or 2 day affairs. The hope is that it's longer. A lot of excuses are being given why that could happen, but it got triggered right on the equinox, the 21st, which is something I've been writing about. It's funny how it just sort of took off right on the longest day of the year, taking off following last week's new market lows. The bond market's rallying a little bit. Everybody's sort of holding their breath that maybe inflation is slowing down, so the Fed won't be as aggressive, and that might give the market some encouragement to rally. The fact that it's dropped as much as it has, again, as you just mentioned, a summer rally, on and on. They don't ring bells at market bottoms. I mean, I could be dead wrong, and we've seen the lows, and it was just a minor little shakeout, but I don't know. The Fed seems to be determined to do a lot more damage, and they can't really control inflation. It's a very small part of what they do, and as you know, I've been calling for the ouster of the Federal Reserve, the abolishment of it for years, and really pushing for it in my newsletter. Nobody, of course, is paying any attention to it, but they're a useless, outdated institution that has caused more damage than benefit over the years. I keep citing how Andrew Jackson back in the 1840s in the U.S. paid off the U.S. debt, though it was only temporary, unfortunately, but he did abolish the national bank at that point, and there was no national bank until the Federal Reserve was created in 1913, and they sort of tricked people because they used the Federal Reserve versus the national bank, which was, I guess, a distasteful a factor for many citizens at the time because of what the negatives that were related to that. But yeah, to answer your question, they're trying for a rally. The charts say you're deep enough oversold. It could happen. I'm not discounting it, but my main contention is don't fall in love with the upside. I don't feel it's over. If anything, it's a minor bounce and down into the fall. And we've been pretty good with the targets. I mean, I have to say, way ahead of anybody else that I heard on financial television, read anywhere. I mean, when the S&P was in the mid 4,000s range, 4,500, 4,600, I was looking for 3,800 and then 3,650, and had published it. We had talked about it on the show, and we got down to that 3,630 level. And now we're sort of bounced around a little bit, but I have targets, I've said this for weeks and weeks and weeks back to the beginning of the year. I mean, they could cut the market in half. I mean, you could get the S&P down to the 2,000 range. I mean, way, way down there, which would far exceed any imaginable number that anyone is putting out there. It could happen. I'm not saying it definitely has to happen. The next target under the 3,600 level in the S&P would be around 32, and we'll take it from there. And that's pretty much the answer to the question about the summer rally.
Gold, is it going to pick up?
I don't know. I don't know. It should. We're in a cyclical time frame. A lot of it has to do with, the dollar. The dollar started to come down a little bit, but gold didn't respond that well. On the other hand, it hasn't collapsed either. There's so much in the gold market, and we can spend hours, but more than that, just talking about the manipulation in the market and the fact that it's been suppressed for so many decades, and whether the powers that be are going to allow it to rally or not. We have this big double top formation in that 2050 to 2070 range, way above the market. We're going to have to really break through that on volume for me to really say, hey, we're going to go. And it could be, if it did happen, a blow-off move, and it could be one hell of a sale up there if it did break through that level, because then it might trigger a move to 2,300 or even much higher. So we'll just have to wait and see. But gold's been disappointing. Again, I think it's being suppressed, but with all the worldwide inflation going on, the whole story about gold being an inflation hedge obviously has been thrown out the window. And again, I think that's related to the suppression factor on the part of the government and so forth. So we're just gonna have to wait and see here. I mean, we're in it. It's sitting in the mid 1800s, but it's going to have to break through that 2050, 2070 area. And if it doesn't do it, my fear is, you could see a substantial correction in gold in the next couple of years, all the way back down to 1,000 an ounce or somewhere around there, where it was back in 2015 or so. So at the moment, we're giving it the benefit of the doubt, but a nervous long with gold.
We'll have more with Mark Leibovit right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mark Leibovit. Mark, industrial commodities like copper and lumber are going down. Is there a reason for that?
I couldn't give you a specific reason other than, higher interest rates on the U.S. side, perhaps tempering the purchasing of materials, thinking that business is going to slow down. So that, could cause a reaction in the market saying that, well, if rates are up and people are going to be less inclined to build or move forward, or whether it's the companies themselves, there'd be, less upward pressure. So, that might explain it. Of course, the markets technically were way, way overdone, way overbought to the upside, just like the stock market. And in a sense, they've been tracking the stock market. So too much money pushing commodity prices and stocks higher, finally, has caused a reaction here. The force of gravity does come into play on occasion. So, that could be just a correction in long-term bull markets, and I do feel they are long-term because there is going to be more and more demand on commodities. If there is a recovery in the world economy, if everybody wants to move to electric vehicles and off fossil fuels, there's going to be more demand for these materials. So I just think my current feeling is more of a correction. I don't think necessarily commodities have to go the same place as the stock market, but if we get a severe sell-off to the kind of numbers that I could see possible, I guess it will affect these markets as well, because the demand may not be there for these products in a economy that people are questioning, at that time. So it'll be interesting how it unfolds, and a lot of it has to do with the strength in the dollar. If that starts to weaken, that would help the commodities. If the dollar stays strong, which it could, particularly with what's going on in Europe and in Ukraine and so forth, which I think is a big part of the problem. And it's not discussed as much as I do in my newsletter, but that obviously will have an impact as well. But we do see corrections in markets, and I'm less of a bear in the commodities than I am in the stocks, but they have been tracking at least just the last couple of weeks together. So let's just, keep an eye on them.
What's happening with crude?
Crude's correcting, and, big picture still positive on all the reasons that we discussed, mainly, of course, the government's not supportive of expansion of the crude oil development or of exploration and so forth. So it obviously is going to be shortages at some point, and that's going to be putting upward pressure, I think, on the prices. But technically, we needed to correct it. It has been a little bit of a correction here, and I honestly, looking at the crude oil chart, I still could see more downward pressure here in the months ahead, just because it ran up so much, and it may also be tied with the same answer that I just provided with regard to copper and other commodities. If things really start slowing down, the markets start really pulling back, people are fearful, the Fed continues to raise rates, scaring people, the war in Europe gets more complex, crude oil could even pull back to the $60 to $70 a barrel range in a correction, which would be about a 50% correction for that market. So I could see that as a possibility, and this is more of a 6-month type comment, but big picture still positive. So right now defensive on the crude oil, but I don't think it's changed the big trend.
What's going on the crypto front?
Well, everybody says it's crypto winter, and it's out there. I actually added, we have in our newsletter, we talk about Ethereum and Bitcoin, and everybody's pretty much given up on them, thinking they're going to zero, which I don't think is the case. Our forecast model for the year said this could be a choppy year with a downward bias in the cryptos. So we're sort of fulfilling that. But I think, some of these discount prices, it might be wise for those who would like to speculate to add to positions or initiate new positions in a Bitcoin or an Ethereum or certain of the big cryptos. I don't think they're going anywhere. We've had huge volatility in the market. We've seen this, and it's not surprising that you've had this much of a correction, or even to get more. But they seem to respond a little bit with the stock market. They seem to be moving together. So if we get more of a rally here in stocks, I guess you'll get more of a technical bounce in the cryptos, and we'll have to take it from there.
Apart from the summer equinox, anything else happening geocosmically to be aware of?
Well, we got a lot of interesting stuff going on out there. We had those thousands of cattle. I think we covered that last week. Out of the blue, something happened, and we get mixed reports. Whether it was 2,000 or 10,000, cows out there in the middle of Nebraska, and then I had read some report from NASA that they warned of a rift in the magnetosphere and the ozone layer, which would allow intense, they call it deadly radiation beams through those barriers. So, that could have been part of it. Many are just attributing it to the heat. Don't know if that's the case or not. Seems very unusual for that, that many animals to be killed that way. And, we have stuff going on, on the planetary level with regard to solar. There is something going on with the sun right now. You have to go to spaceweather.com. If you go to that website, you could read the report about some potentially huge solar event unrelated to this magnetosphere story that I mentioned a moment ago in the ozone layer. Well, who maybe could be related to the solar as well. So there's some solar activity going on right now, and we got to keep an eye on that. Generally, it's not covered or talked about, but we know that even in recent few months here, we've had some solar flare activity that's knocked out shortwave radios around the world, particularly in Southeast Asia. So they're having some tangible consequences to solar activity. So it's something to keep an eye on. There's always something daily happening here. You had that huge earthquake in Afghanistan. That was reported the last couple of days. So apparently hundreds, if not thousands, of people were injured. So definitely, the planet is active. We've been talking about this for a couple of years about increased volcanic and or earthquake activity on the Earth. And these, of course, could be life-changing events It doesn't seem to have affected the stock market yet here, unless we get one in New York or in Chicago. I remember when I was in New York in the mid-1980s, I got thrown out of bed, believe it or not, because of an earthquake in Manhattan. People thought it just was a sonic boom or something, but it was an earthquake, and it does occur, and the earthquake faults all over the Western Hemisphere. So, something out of the blue could happen here as well, and, we're not impervious to Mother Nature, though obviously when we talk financial stuff in the stock market, that doesn't seem to be the number one topic of any sort. We are, of course, also in hurricane season. Nothing has started yet. I suspect from what I'm reading, it could be a very active season running well into September, October, and that, of course, could affect energy prices, individual safety and so forth as well. So I would suggest preparing for something if you live in the southern part of the half of the U.S., stretching from Texas to Florida. They seem to get the brunt of it, although we have had some usual serious events up to New York and New England as well as a result of this. So, the other thing to mention is, there's still food shortage issues. The shortage of diesel fuel out there, the shortages of fertilizer. So a lot of my sources are saying, on balance, we're going to see higher food prices and possibly some serious shortages in the months ahead or well into next year. So it's far from over, and we have to keep an eye on Europe. I mean, it's not the number one subject. The number one subject when you turn on the TV is the Federal Reserve, which has very little impact on inflation. And in terms of controlling what's happening in Europe, that could escalate. And my feeling is much of the market risk going forward is related to the risks in Europe and an expansion into a more serious conflict, particularly since the U.S. has decided to spend a lot of money in terms of equipment and support for Ukraine, which will do little to save the situation and more likely aggravate Putin or his successor, which I don't think is very good for anybody. So even Henry Kissinger was quoted, I believe, in the last couple of weeks. I don't know if you saw that story about how we should just forget Ukraine, let Russia have it, and just walk away from the situation because it's going to create nothing but more and more problems, escalate into potentially a World War III, and spend a lot of money that really should be spent on our own people and our own hemisphere. So that's a wise piece of advice, I thought, coming from Kissinger. I don't think too many people talked about it or gave much exposure. There just seems to be a lot of sentiment for Zelensky and the whole Ukraine situation. So I think it's misguided, but that's just my own personal opinion.
Mark, thank you so much for chatting with us.
Have a great week. Thanks for having me on.
My guest has been Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as vrtrader.com. If you have any questions for Mark or any of our other guests, you can send them to info@howstreet.com, our YouTube channel, Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.